Hello, my friends. Katie Day with the MOVEMETOTX Team here with another episode of the MOVEMETOTX Podcast. I am joined today by a couple of friends from across the country because we wanted to break down an article about basically Goldman Sachs talking about home prices falling in different markets across the country. So I've got my friends here on the call. We've got Rich Brecklin from Arizona.
Hello.
Krista from California, Jeremy from Austin, Texas, and Jason Cassidy popping in from San Diego. What's going on, guys?
Hey, what up?
Hey everyone. Anyways,
Hey.
So for any of you that may not have seen this article, basically, I pulled it up from Housing Wire. See if I can figure out how to share my screen here. But I pulled it up from Housing Wire. But basically, Goldman Sachs came out earlier last week and said that they think that there are 4 cities across the country that will see a 2008-like correction in home prices. Have you guys all seen this article?
Yes.
Yeah.
Yep.
So, the article basically says because of the S&P CoreLogic Case-Shiller National Price Index on homes, it's going to be a 6.1% drop in prices across the country, but that San Jose, Austin, Phoenix, and San Diego will see they're overheated and they're going to see from peak to trough more than a 25% drop. Rich, I know you are in Arizona, in the greater Phoenix area. So what are your thoughts? What are you guys seeing in your local market?
Yeah, I mean, looking at this article, obviously it gets people's eyeballs on it. But, here in Phoenix Metro, I wasn't here yet, but looking at the numbers, they went from a peak of $265 down to $106,000 median. And we have seen a price reduction. I think in May we peaked at just under 500,000 median sales price, and now we're down to, around 500, and now we're down to like a 415 median. So we've seen around a 13-14% drop. But I think you have to look at where we came from. We had a 38% year-over-year appreciation, and that's gone. So it's kind of that artificial number. We've seen a price pull back. But we're still ahead. If you've owned a home for over 2 years, 3 years, and 5 years, and I was looking at all the appreciating factors there, you're in a good spot. I think the people who are going to get in trouble are those who bought a home in 2022 and want to sell it now, depending on when they purchased. They're trying to day trade real estate. But we have seen a pullback, and a lot of that negative numbers are the institutional and hedge fund buyers. Your Open Door, OfferPads. I mean, they were making up such a huge amount of the purchases here, and then they're sitting on this inventory. And I went through a ton of them, just kind of curious. I'm like, all right, I see they're listed at. I've seen the $100,000 reductions. What did they buy for? And so many of them are just taking a beating. So I think that's also a huge factor, just because that is such a presence in our market. So I think you really have to go in and look, not so on a broad spectrum of this reduction in this fall, but I can't predict the future. I don't know anyone who can predict market rates over 2 months in advance, but I'm not worried that we're going to see this fall back and fall out in pricing, like they're saying, 2008 comparison.
Well, and one thing that they were saying about San Diego and Phoenix is there's a Redfin report that came out basically stating that those are 2 of the most popular markets for seller concessions. And so, they're seeing a lot of that in your market. As far as seller concessions, people using that for repairs, mortgage rate buy downs and stuff like that. Are you seeing a lot of that in Arizona?
Yes. I just put 200 contract with buyers this week, and both of them, we asked for seller concessions. I can't remember the stat, but it was super low before, like anywhere, but now it's becoming more and more common and getting sellers on board, and they acknowledge that. But we're still seeing some where that's not working. We have homes getting multiple offers, and sorry, you need a concession, but we had a 24% reduction in inventory over the last few months.
Yeah, no, I hear you there. Jason, what about in San Diego? Are you guys seeing a lot of concessions, or what are you seeing as far as pricing goes in your market?
Sure. There's concessions happening, which isn't necessarily a terrible thing. I think from 2020 to 2022, early 2022, you were giving away your firstborn just to get a showing on the house. And now it's a little bit more of a healthy situation, and so what Rich just talked about there was so true, is like, if you bought a house pre-COVID right in 2020, up to the peak of late 2022, mid 2022, you were up like 40%, 45%. And so even a reduction of 25%, you would still be fine, right? And so yeah, the people who bought in late 2022, but like, I don't know, every real estate professional I know tells you, like, you know, if you're buying a house that you can hold for 3, 4, 5 years, and you're able to afford the payment, go for it, right? And so, like, because even those people who bought in early 22 before the rates went up, if they can afford the payment, it almost doesn't matter what happens here in the next 6 months or a year, because they're in a primary house, they've got a 3% interest rate, and they can afford the payment, right? I think the article itself, I had seen it first from NBC San Diego. Now it's on Housing Wire. I think they like to throw out 2008 because that's what immediately will get clicks, and people say 2008, the crash. And at its, you know, at its peak, I looked up San Diego here, 2007 to 2009, the entire market went down about 45%. So if their statistics are true and it goes down 25%, it's nowhere near 2008. And we all know that 2008 was caused primarily by loose lending standards, which led to foreclosures. You guys can go watch The Big Short. It teaches you all about it. And that has nothing to do with what's happening now. In fact, I was just on Instagram the other day. I looked up a Google Trends search of the word foreclosure, and you can see that in 2008, 7, 8, 9, it peaked, and it's completely like it's.
I think he was going to say it's completely now very low is what the point was, because he posted it on his Instagram and I saw that. Rich, you made a point earlier about basically, like, if you bought a home today and you're trying to sell it next year, you know, you're likely not going to be able to sell it for more money. And like, I mean, that's kind of always been the case, right? Like you've always tell people, like, hey, if you're not going to be here for 3 to 5 or more years, like, it may not make sense for you to buy. So like, you know, I don't think that that's any different than what we would have told people before, you know, that 2021, you know, crazy run of real estate. So, you know, just interesting there. Jeremy, what are you seeing in Austin?
Yeah, I mean, first of all, this article is kind of interesting. I feel like it's very lazy because you just say, all right, here's 4 cities that we think are going to be over 25%, but you actually don't do any due diligence to talk about each of those cities, just numbers, like, here's 4 cities, right? So I feel like that was kind of lazy journalism. Secondly, you know, you wonder why people don't trust the media anymore. Number one, it's easy to write a clickbait article title, and then everybody just shares it and assumes that it's all the same thing. But they've already stealth edited the data that they had in here. They've already corrected their data. They said nationally we'd be down, I think it was like 4.5% or 6.1%. And they've already changed to like 2.1% down. So they've already had to go back and stealth edit their stuff. So how trustworthy is the number that they just threw out? So that's one thing. Now, in Austin, I feel like it's super lazy because if you opened up the chart that I have up here, I can show you that Austin's already down 20% from year over year. I mean, I put together all these charts for my channel, but the red line is 2022. And then we ended the year at 525. It's going to take a lot of work to get back to 667 as a high. And keep in mind, this was all people trying to buy right before we had, you know, interest rates go up. So this is a panic buy. If you actually look at the first month, we didn't go up that much. In fact, if you compare that to 2021, that's actually pretty low gain, but then everybody freaked out. So this is all FOMO here. And if you actually look at where we are, where we really should have been, which is around that middle number of 615, we're actually only down like 14% year over year right now. But you can't tell me that we're going to actually keep going down. In order to get to 25% down in the Austin area, we're going to have to get around 500. I can tell you, you know, this is anecdotally, right? But right now in Austin, the market is kind of rolling back. It is. All my listings I put on have gone under contract. All my buyers that were like, hey, I'm ready to buy are all under contract. I have more buyers coming in town next week, more buyers coming in town the next week. So even if we stay just completely flat at 525 the rest of the year, let's just say hypothetically we didn't go up, we didn't go down, the most we're going to be down is 21%. So it's just lazy journalism. I'd love to see where they came up with this number, but we might be at the end of in the middle of the year, we might be down probably 16, 17% because I think our prices will come up a little bit. I don't think they're going to come up a lot, but I'd say like probably get us back around 550, 560, stay in there. But even at the end of the year, we're going to end the year positive. If you go by this number right here, let's just say you went 525 all of next year and we hit the end of next year at 525, we're at 0%. That's not negative 20%. That's negative 20% down from the the peak. So I just feel like it's lazy journalism. That's it. And Austin is definitely picking up again. Now, everybody, when I say that, people get, oh, you're just a realtor selling real estate, because they love to just use that because they don't understand, what's really happening. It does take a little bit of data and boots on the ground to figure out what's going on. And they just want to discount the boots on the ground part of it. But so many people on my channel, when I posted a video the other week, were commenting, yeah, I can't get a home under contract. Everything that I've been following on Zillow or Redfin is already under contract. So you're seeing people already like, hey, the market's like really picking up. Now, I'm not saying it's going to be this crazy multiple offer all year, for sure. No, I definitely see that we're going to have a lot of recessions, buyers getting, percent off of the deal. And we'll probably see new construction slow down a little bit as far as like how much their price is appreciating. But at the end of the day, we're not going to be 25% negative. It's just not going to happen.
For sure. No, I would agree with you. We're seeing the same thing over here in Houston as far as, multiple offers coming back and just the buyer demand in the market. I think we had a little bit of an interest rate drop, here in January. We had a lot of pent up buyer demand from the holidays. Krista, what are you seeing in the Bay Area?
Yeah, very similar to what Jeremy mentioned. So we're seeing a lot more traction right now, but the point that no one has brought up yet is inventory. So I pulled data from San Jose Metro in 2008, right after the crash really started happening, and it was at 5,900. So almost 6,000 active homes on the market in 2008. And today, right now, 479. So when you look at just from a data perspective, I look at those numbers and I'm saying, well, yeah, that checks out, right? That was the last time that we saw homes in the 5,000 range of inventory was 2008 through 2010. We have not seen that number in a really long time. We're still in an inventory crisis. I personally am seeing tons of my clients that can't find the right house, right? Yeah. And we are starting to see multiple offers. The last one we did was 12 offers. The one before that was 7 offers. So people are starting to come back, but the interest rates and unemployment, of course, are going to play really big into that, especially being in San Jose and being so tech driven. Of course, that's going to affect things. We don't know what we don't know. So we're going to see what plays out with different layoffs and how that really affects us in our market. But even if that happens, based on pure number of inventory that we have, it's proving this article completely wrong. And I mean, year over year, we are only actually 2.5% down, but from complete peak, we're 17% down. So again, very similar to what Jeremy said, but I think we'll probably see a 2 to 3% increase this year based on the activity that's happening right now.
Which is like a normal year of appreciation, right? Like, I mean, people just got so spoiled by 2020, 2021 of these double digit price appreciation hikes, right? That now it's like 2% seems like the market is just coming to a complete screeching halt.
Yeah. And that's exactly what it was in 2019 was 2%.
Well, during the 2008 recession, what was there, like 3.7 million homes on the market? If you look right now, it's less than a million. It's like 900,000, like just nationally. So it's really hard to say, and that's where it's like, it's super easy to get clickbait and clicky and like, hey, let's talk about 2008 because everybody's already fearing 2008. And look, they're also, what's frustrating is they're playing into the fears of people that are sitting on the sidelines, and they're sitting on the sidelines because, okay, prices got too high. Now interest rates are too high. So I really want to buy a house and actually like start like gaining wealth from owning a home. Can't do it because of this or this or this. So you're just continuing to play into the fears of people that could potentially put themselves in a position to buy a home. Because guess what? 2 years ago, if you didn't have 20% down, you were not getting your offer accepted. Or if you weren't cash, you weren't getting your offer accepted. Now you can. And just like Jason said earlier, I don't ever advise a client to buy a home and hold it for 2 years. It's pretty silly. Like, make sure it's a 10-year plan, 5 to 10-year plan. And so every agent should be at least reiterating that to their clients as well. Not every agent's cut the same. I get it. Everybody thinks that realtors are the worst, but the reality is that if you can afford to buy a home, it's still not a bad time to buy a home if it's in your plan and it works. Yeah. Yet you're feeding into this like scared mindset you get from articles like this.
For sure. Jason, were you going to say something earlier?
Yes, to Krista's point there too, but like, so because from peak to trough here in San Diego, we're down about 12%. That's leveling off too. I don't know where I cut out. I had lost my computer there for a second, but
all good.
45% in 2008. We're about 12% peak to trough right now, and it's leveling off. You know, inquiries for search, buy a home San Diego are up. If you go check your Google Trends, like Krista said, we're seeing the same thing. We have multiple offers anecdotally, but like the last 2 weeks has started to get busy again. We've seen more leads come in, things like that. So anticipating leveling off at, about a 12% peak to trough, but it's about 2% down year over year. The problem is going to be that in June and July of this year, the year over year will now say down 15% or whatever, and wait till the headlines come out then. So like this run of scary headlines is not done, because once we hit June, July, August, the year over year will now say 15% down. And they're going to get blasted all over the place that the housing market's crashing 15% down. So this is almost canary in the coal mine. The headlines in 6 months are going to be worse. Because now they're going to show year over year decline of 10 or 15%, unless we come back up. But, I'd say we're probably going to be about level, maybe go up 1 or 2% over the next few months. And so that's when the headlines are actually going to get really bad. I'm not looking forward to that.
It's very, oh, sorry, go ahead.
You got it. We're just saying, we know what's going on, but sometimes NBC, San Diego, or Housing Wire has more pull than we do, and they can get the word out quicker than we can. And so I'm a little bit concerned about what happens then compared to now. But
yeah, and I was just going to say it's very similar to how they pull foreclosure data, right? They're like, oh, it's up 60%. It's like, well, it's still not 2009 numbers.
And the number was like
here
versus
2019 was a normal market, and now you're comparing this, and well, yeah, of course, the numbers have increased.
Scale of 1 to 10, we went from a 0.001 to a 0.002. It's 100% up, but it's like, okay, but come on, like, let's be real, like, it's still not that much.
Well, then the other thing too is like you have commentators who are intelligent people, and people trust what they say, and they come out and go, yep, see, this is validation. Like prime example, Patrick McDavid, like months ago, the guy's this very intelligent guy that has some really good guests on his show, but for months they've been like, oh, see, the market's going to crash. It's going to go to 10% interest rate, blah, blah, blah. And they're like, see, this article just proved it. You guys didn't do anything to actually verify what was in that article. You didn't do it was just like, here's the headline. Yep. 25% in Austin and San Diego, no big deal. And so now you have people that just read the article, don't even know that the information in the article is actually changed. It didn't even bother reading the rest of the freaking article. And they're intelligent people, and they do the same thing that happens with all these other, news outlets, quote unquote news outlets. And they continue to propagate things that are more scare tactic than anything.
I wouldn't be mad at, because like the premise, forget about the headlines, forget about what they said. The premise of the article is these 4 markets are really, really hot, and they got hot really, really fast. So they're going to correct faster than the rest of the nation. Sure. If they had wrote that, that's probably true. Like these Austin, Phoenix, Bay Area, like these San Diego, these are probably 4 of the hottest markets that are probably going to correct hotter than the rest of the nation. That is an accurate statement. But by saying the market is crashing, or it's 2008 again, they're using hyperbole. What's the word there?
Hyperbole.
Yeah, and like it's not necessarily the whole truth. They're just doing it to get clicks and headlines.
Well, and that's 2008 light correction in home prices. What's funny is there's like one comment on this, and it's like, you guys put out a completely misleading headline. The price levels are not going to be the same as 2008. Anyone who thinks that prices will be 2008 is not thinking clearly, right?
Correct.
And so, that just kind of made me laugh. I don't know if I was the only person, probably not, but I put out a video back in like August or September that said, hey, for a certain subset of buyers, you probably should wait 6 to 12 months to buy a house. Here's why. And it was like, rates are getting ready to get jacked up. Here's you know what I mean? It's basically like, there's price correction coming. If you don't need it, it's not primary. I listed out all the things. And I'm like, you should probably wait. I don't think realtors are just always out there to say, always buy. We're giving the proper advice. It's just, we're fighting headlines that are sometimes tough to overcome. For sure. One of the things, Krista, you mentioned earlier was tech, right? And so, Krista, are you and Jeremy seeing a lot of layoffs or people that are selling their homes because, they can no longer afford them because they're losing tech jobs? Or have you not seen as much of an impact in the Bay Area and Austin?
So for me personally, it's interesting because I've had a few clients endure layoffs, but they were employed again within 1 week. So it wasn't the unemployment scare or issue. It's more of those specific companies were going through layoffs. It's not the entire Silicon Valley, right? So my clients that were going through that, they corrected and figured it out very quickly. So there was really no downtime for them, nor are they overly concerned about it. And selling, I mean, really, most of my clients that are thinking about selling are just buying something else. They're not in an unfortunate situation. And I mean, again, this is another point to how we are not in 2008 is the amount of equity that people have in the Bay Area. Let's put aside the last 2 years. That doesn't even matter. But the amount of equity that is in our area is so insane. I mean, I think it's 80. I mean, it's crazy. It's like an 80% homeowner has 50% or more in equity on their home. I mean, it's a crazy, crazy data point. And people are really comfortable in what they can sell right now. They're not selling and going into this big, bankruptcy or foreclosure or anything else. They're in a healthy place. So they have a lot of options.
I mean, yeah, I agree. The same thing in Austin. I love Matt. What's up, Matt Bittner? What in the comments? Love you, buddy. Matt said, how is there supposed to be a housing crash without increased unemployment? And I talk about this constantly on my channel. Right now, Austin's at 2.6% unemployment rate. So if we saw some layoffs, it's not the worst thing in the world. Now, we're going to get hit with a lot of these layoffs with Google and some of these other places. But what's hysterical is Apple is expanding their campus in Austin. Tesla is going to add another $700 million to their plant in Austin. So it's not everybody that's experiencing this. And to Chris's point, a lot of these people are just finding jobs over at Tesla. They're moving over
different
somewhere
company.
else. There's still available jobs. I mean, Apple, if you think about it, Apple was supposed to hire 10,000 employees. I don't think they're even halfway through there. So Dinosaur D, what's up, buddy? There's a trader among us. Oh man, I love it when my crew comes over. Anyway, so yeah, I think it's going to be tough for Austin to see that. But to the point, I think we will see some homes list, and it's not going to be right now. It's probably going to be in 2 months. People are going to probably get their severance check and then figure out what to do. And then, we better sell our home now. And I think even in Austin and Katie, you're in Houston, we hit that May timeframe and those tax bills come out for the next year. People start questioning whether they want to live in Texas anymore or they want to live or own a home. So I think we're going to see more inventory. Austin is already starting at a year at a much higher inventory than we did the previous year. We're like 9,100 units. What's crazy to me is whatever's listing on that week is going under contract. So let's say we had like 500 homes list that week. We're having 500 plus homes go under contract. So our inventory is starting to actually tick down. And that's something that we even in the Austin Business Journal, they kind of highlighted like, hey, inventory is actually coming down since November. So Dinosaur D, what's up?
Yeah, we've been seeing that as well as far as, properties that are going under contract and the inventory, like it's negligible, but every week it's ticking down a little bit. So we were at like 25,000. Now we're sitting under, 23,000, which Krista, how crazy is that? 23,000 listings on the market. So when you were like, thousands and hundreds, I was like, man, that's unreal to me because it's like, we've got like 20,000 homes for people to choose from. And it still seems tight sometimes, which is, interesting.
What are the inventory numbers in San Diego area, Jason?
Between 3,000 and 5,000.
Yeah.
Like countywide.
Yeah, county.
Downtown San Diego, which is where my office was for years. I keep a hot sheet. Like I watch that. There's less than 200 homes. Yeah, out of like 10,000. It's pretty low.
Yeah.
And that's the thing. I mean, if you really just go to the core of all of this supply and demand, right? It's the invisible hand of the markets will kind of prevail in this entire thing. And the only reason we saw that 12% drop peak to trough was because the Fed almost historically rose rates as fast as possible to try to offset this just a tad. And had that not happened, it probably still would have been off the rails, like insert rocket ship emoji here. And that's, so, I mean, we can get into a debate, maybe 3 years from now, look back and say if that was a good thing or a bad thing. But to say that the crash was anything other than man-made is false. The fundamentals are still
Yeah.
there. There's still, at least, especially in these 4 cities we're talking about, but there are still more people looking to buy homes than there are homes available. That's the long and short of it.
Yeah. Well, I'm glad to get you guys all on the call to chat about this because it's definitely something that I'm seeing a ton of headlines. Obviously, Goldman put out this report earlier last week, and then, all of the news outlets are picking it up and reporting it with different clickbait headlines. So it's good to get, information out there and kind of what's actually happening in the market.
By the way, shout out to Goldman for putting out this article and then also contributing like $1 billion to buying single family and multifamily units across the country in the same breath. Shout out to Goldman.
Shout out.
Well,
to them.
it's almost like they planned that, right? They get everybody
It's
scared to
almost-
not buy homes.
Yeah,
There
it's
you
almost
go.
intentional. Interesting.
Odd.
Yeah. Yeah. We could have another episode about institutional investors that are their impact on affordability for the average American. But I think that would be another hour on its own. Just that. So we'll save that for another day. All right. So Jason, if someone wanted to connect with you in the San Diego area, what's the best place for them to reach out to you?
Call me.
Google Jason Castia and call him.
Google, where's my name? You can Google my name. Follow me on Instagram. That's probably the best way. Just shoot me a DM. I mean, honestly, it's 2023. You can find me like
Google his name. All right.
Wow.
Krista, Bay Area. Any plug for the Bay?
Yeah. So you can find me on Instagram at this handle right here or on YouTube if you want to see more Bay Area stuff.
Krista Nielsen.
Yeah.
The real
Call me
Jeremy
Spy
Knight.
Krista.
The real Jeremy Knight. I'm trying to find the answer to Dinosaur D's question right here. So it was about what was the inventory. So in Austin, okay, perfect. So in Austin in 2018, in January, there was 5,000 homes available. And this year it's 7,000. So it's 2,000 more than 2019.
The most important question: when's Jeremy moving back to Austin?
You see, here's a funny thing. I left Austin for schools, right? But I would live closer to downtown. I'd live in 78704. I'd live near Zilker Park in a heartbeat, but not for their schools. I'd have to pay for private school. Thank you, Jer Bear. I love Dinosaur Drake. Yeah, if you want to find me, just Google my name, Jeremy Knight. You will find me on YouTube, and yeah, you'll find me. So there you go.
Jeremy, where did you live before you went to Austin?
San Diego. It's called the Whales. What is it?
What was it?
Yeah.
What were the initials of the guy who sold your home here?
His name was George Castellan.
I said the initials. You were supposed to play into the.
It was JC, but it's all right. Yeah,
Well,
good old JC.
You guys go way back.
George and George. Yeah.
We do.
Jason, do you have any plans to move to Austin, Texas?
I love Austin. I've been there like 3 times in the last couple of years. It's always fun. I did get sick at Cooper's Barbecue one time though, so I'm holding.
Well,
that
shout out.
that's the
to
thing is
Coop.
like everybody goes to the downtown places. You don't get good barbecue downtown. You got to
know.
go to the offsite places.
I know. I went to. I was pretty much downtown the entire time. It's
Yeah.
my fault.
Yeah. Everybody says Black's the best barbecue. Nah.
What's your go-to, Jar?
Oh, geez. Valentina's is my favorite. Cooper's out in Llano is an experience in itself. So the real Cooper's is great. Franklin's isn't bad. Law Barbecue, good spot. Yeah, those are my 3.
What's the one that's between Houston and Austin? The big one.
Oh, are you talking about Snow's?
No, I haven't been there yet. It's like right off 290 when you're coming back and forth.
Yeah, I know what you're talking
South
about.
side,
I
right?
don't know the name of it. I've been there
South
once.
side?
It was okay. What?
It's all right. South side? Or is that?
Yeah. I think that's what it is. It's right off, what is that, 290 or 71?
Yeah.
71?
Yeah.
Yeah, it's all right.
Yeah.
It's not
All
my
right.
favorite.
Well, I appreciate y'all hopping on to chat a little bit about your markets. If anyone is looking to move to San Jose, Bay Area, Austin, Phoenix, San Diego, these are the people to reach out to. Well, not Phoenix because Rich bounced.
Rich is bouncing. He's
Yeah.
like,
Yeah.
I don't care
So-
about
He's
that.
too good for it.
He was like, I'm going to give you all the scoop on the Phoenix, Arizona area. And then he had to go pick up his kids. So
Goldman Sachs called him.
Yeah.
Goldman was like, don't touch it.
As Kevin on my channel said, Goldman Nutsacks. So that was a good one. But hey, Katie, question: when are you due?
Next week.
Next
You
week.
wanted to work that Goldman Nutsack.
I
in here,
did.
so
I was waiting
Yeah.
for it. I even said
You're
it a
welcome.
few times today,
I-
another podcast.
yeah.
I did a
appreciate it.
layup for you. Mhm.
Yeah.
Yeah. Thank you.
Krista,
right,
well,
y'all.
where are we getting drinks tomorrow? See you at 5:30 p.m.
I can't. Stupid ice in Austin. I can't make it till
That's why I said
hopefully
Krista.
Thursday
That's
morning.
why he said Krista.
That's why I said Krista, not Jeremy.
All right. Well, I'm
yeah,
just
sorry.
going to go ahead and end this. Thank you guys all for your time. Appreciate you coming through.
All right. Bye,
I'll text
Jason.
you,